reading of 37.98 right now would be lower and most likely below 30. So I'd say this is one that if we were trading live, we could have had an order sitting there waiting for that bar to close lower. But we see on the next bar, the bar actually closes higher. And so this is a great example, because if this ever happens, we simply cancel our stop order. Remember that to trade a long signal, we place a buy stop order one tick above the high of the bar. To trade a sell signal, we place a sell stop order one tick below the low of a bar. And if at the completion of the bar, the signal is no longer valid, we simply cancel that order. A sell stop order is only triggered if that price point is hit, and with a sell stop order, that would just become a sell market order once triggered. Now we see that MACD is still telling us that there's a downtrend, but based on our entry rules, we no longer have a valid sell signal, because the lower Bollinger Band is really moving sideways and price is pulling away from the lower Bollinger Band, which tells us that the trend could be changing, or at the very least, the trend is weakening. So we no longer have a valid sell signal, which means we don't want to have any orders in the market. Now we have another red bar. The bar is closing lower, so it might come back down here. But the lower Bollinger Band is not angling nicely lower, and price definitely isn't closing near the lower band. On this bar, we still have MACD giving us a downtrend, but our sell signal rules say that it is not an entry. We still have MACD giving us a downtrend. We still have MACD giving us a downtrend, but we're not getting a valid sell signal. So this is why we don't rely on MACD alone for us to risk money in the markets. Instead, we want to follow the rules of the simple strategy to determine the best point to get in and the best time to risk money. Now we have price tagging this upper Bollinger Band, and it would be a trade to consider. We could even wait a bar if we wanted to see if we got RSI confirmation, or if we wanted a slightly higher slope. Here we see that the angle of the slope is, this looks pretty good, especially since price is tagging the upper band. But let's give it one more bar just to see if we even have a stronger slope, and that's the case here. A good rule of thumb with any trading strategy is when in doubt, stay out, and look to see if you have a stronger signal. And in this case, I would say that if you didn't take the first trade, the second one would be one to consider. We have MACD bullish based on the rules, so MACD is above the signal line and the zero line. We have price tagging the upper band. The angle of the band is angling up nicely, which is exactly what we want to see. RSI is at 67.83, so not above 70. If you were using that as a filter, you'd want to wait. Otherwise, it's a pretty good looking signal to consider. On the next bar, we get into the trade. We see that we still don't have RSI above 70, but once we're in the trade, we now need to place our exits. Based on the average daily range, we're using a 2 3/4 point stop loss. That would be 11 ticks, or $137.50. And we're looking at a 4 1/4 point profit target. So a 4 1/4 point profit target would put us up here at 2020. And another thing to keep in mind is that although we don't have a black bar this time, we're getting a separation between signals, because we went long earlier. We had a black bar which resets the trend, so now we could start looking for a new signal. We had a downtrend that we were considering, but we never had a valid signal, and now we have an uptrend. This is what we want to see, instead of just trying to jump into an uptrend again after we've already taken profits. We don't want to force the trend, but if the market goes sideways or we see opposite signals and then a new valid signal, then it's one to consider risking money on. Here the market's moving higher. On this bar, we get up to 2018 or 2019 1/4, 3 ticks away from our target. Not quite yet. We're looking at a profit target, a stop loss, which is down here, or a change of direction. Here, we get up to 2019. Our target hasn't been hit yet. And we see that we're starting to flatten out, but we haven't hit our stop loss. Okay, on this bar, we have an exit because we have a black bar completing, so we want to get out of this trade. And it looks like we also were stopped out on this trade. So keep in mind the expectations that we have for the strategy. We can make money even if we have a 50% winning percentage. And so here we have an example where on the first trade, we had a 4 1/4 point profit, which is the same as 17 ticks in the E-mini S&P. Each tick is worth $12.50 if you've never traded the E-mini S&P before. So that would be a $212.50 profit. On the next trade, we came close to hitting our profit target, but without using any other rules or trade management and just letting the trade work, knowing that we didn't get a black bar. We got a black bar a little late in this example, but we have our risks predefined for a reason. And that is because if we have a 2 3/4 point loss, which in this case is 11 ticks, and with each tick being worth $12.50, that would be a $137.50 loss. Total profit with 50% winning percentage isn't too bad at $75. This is why we want to know when to get out of a trade, really before we ever get into the trade, and why even with a winning percentage of just 50%, we could still make money. Now let's see if we have a short signal that we can evaluate to give us an example of exactly what we would do if we sold the E-mini S&P and went short. So moving ahead to the current trading session, this is during U.S. hours, which for the trading that we like to do is when we like to use a simple strategy. This bar completed at 10:25 a.m. Eastern Time. This was all overnight trading that took place. We have some red bars, then we have black bars indicating a possible change of direction, and now we have a red bar, which tells us that based on our MACD rules, we have a downtrend. But price is not tagging this lower Bollinger Band, and the lower Bollinger Band is not angling lower nicely yet. So we need to wait a bar. And by waiting a bar, we now see price tagging this lower Bollinger Band. And we can put a sell stop order 1 tick below the low of this bar at 2004.5. And on the next bar, we would be getting into this trade. Now, with a sell stop order, it's triggered once we hit 2004.5. It becomes a market order. We're now short 1 contract. Our average daily range for this day was 25. So with a new day, we have a new average daily range, and 15% of the average daily range gives us a 3 3/4 point profit target. So our profit target is down here at 2,000 3/4. Our stop loss on this day would be 2.5 points. So our stop loss would be up here at 2,007. Now keep in mind that if we have sold a contract, to close a trade, we want to buy the contract back. So we would use a buy stop order for our stop loss, and we would use a buy limit order for our profit target. So at 2,000 3/4, we have a buy limit order sitting in the market, and at 2007, we have a buy stop order. Now, also keep in mind that RSI confirming the trend is a good thing here, and this tells us that we do have a strong trend. So for any traders using RSI as a rule and incorporating it into their trading strategy as a filter, this would be the signal to consider. It would be getting into the trade just a little late, but when we have strong trends, RSI being present and confirming, and because it's a downtrend being below 30, can really give us a good looking signal. Now we have a move down to 2001.25 within 2 ticks, but we have not been filled with our stop or our profit target. And then on this bar here, we get down to 2,000. So this 2,000 3/4 profit target would be filled. And in this case, we would make a profit of, this would be 15 ticks, which is $187.50. So this would be a good sell signal. We also see that the move does continue, but we don't want to get into this one late, and we see that with a black bar we would have a reason to get out of this trade, actually slightly worse than our profit target if we held on to this trade. Another thing to point out is that in a strong trend, waiting an extra bar for RSI doesn't hurt us. If you wanted to wait for RSI confirmation, then you would see that the entry would have been at 2002.5. The stop loss would be at 2005, and your profit target would be 3 3/4 points lower. So in this case, the profit target would be down here, and even though, actually, it'd be there. And so even though you wait an extra bar for RSI confirmation, when you have a strong trend, that extra bar does not matter, and RSI confirming the downtrend helps us get into a nice opportunity when the trend is strong, and our profit target based on the average daily range allows us to get out of the trade for profits before the market turns. I know sometimes when we see this extra move and we see that we got out early, it could be a little frustrating, but you are always going to get out of a trade either too soon or too late. You're either going to get out too soon before, even though the market continues the trend just a little bit more, or you're going to get out too late where the earlier exit, in this case a fixed exit, was perfect, and then you get out and you actually give up profits because you got out of the trade late. So with the average daily range and using volatility in the market, it allows us to have precision exits and gives us an opportunity to have confidence and to really set it and forget it, to not worry about over managing the trade, which is the downfall for most traders. So these are the rules for the simple strategy: when to get into a long signal and when to buy a contract, and when to get into a short signal, how to identify both uptrends and downtrends, and when the market is moving sideways, and almost more importantly, when to get out of the trade, and how to use the average daily range to calculate a profit target, how to calculate a stop loss, and then how to use MACD to determine if we have a change of direction in the market.